Okay, good morning, everybody. Welcome to today's morning coffee with Mike. We are talking about the recent action in the QQQ. Is it constructive or is it destructive? And the reason why I wanted to talk to you about this today is because even though we're talking about the recent action over the last couple of days, over the last couple of weeks, the concepts that you're going to hear today apply tomorrow, the day after that, the month after that, the year after that. So let's dive in, grab a pen, grab a pencil, and we'll get started here. All right, so switching the screen over in YouTube land and switching it over here in Instagram. All right, so here is the recent action in QQQ. Let me share with you all exactly what I'm seeing. So the QQQ, for those of you that don't know well what it is, QQQ is basically a proxy. It's an ETF that tracks the top 100 stocks in the NASDAQ. And it's the index that is leading the market right now. So here is a quick peek at the other major indexes. We've got S&P 500. We've got the NASDAQ over here, the Russell 2000, NYSE, Dow. But for right now, let's just focus on the Qs because that was the question there that came up. I was actually talking about this yesterday with our members in our elite program. I also happened to see Richard Moglen post about it. I think he posted about it either yesterday, last night, or maybe it was this morning. I replied, sharing a few things that I saw and wanted to go deeper into it with you guys. So here we go. All right. First thing that struck me about the recent action here is that, and let's make this a little bit wider. This is one of the great things about TradingView. You can really manipulate the charts here. So anyhow, this you see how this action right over here is fairly tight and controlled. Like you break out back here and then you march up a bit and you're gaining some traction, you're pushing towards highs, you consolidate, and then over the last no week and a half, the price action started to go from nice and tight to wide and loose, and you're kind of all over the place here. You notice that? Yeah, I noticed that too. Another thing that I noticed is that back here, you're closing in the middle of the range. The price action, the daily closes, they're closing in the middle of the range or towards the top of the range. And then over here, over the last couple of days, now you're closing towards the low of the range. And not only that, you're getting an uptick in volume over here. So what does all that translate into? It translates into a change in character for the Qs and for the market in general. When you see a change in character, it, it's it affects the stocks. It can affect the stocks of the rest of the market too. And when you start to see chop like this develop, it's a good idea to start to reel some stocks in, especially if you're not gaining traction on the most recent positions that you put on. Here's a few more examples. Right, so here's a few other things that I like to look at, not just the cues, but some things that help us to gain some more insight into the overall market itself. So here is the other indexes. We took a real quick look at these before, but we've got the S&P 500, NASDAQ, Russell 2000, New York Stock Exchange, and the Dow. The NASDAQ has been the leader, but it's it's the only one that's really holding on at this point. The Russell is broken down. The NYSE is starting to break down. and the Dow and the S&P 500 are above their 50-day moving averages, but they're getting progressively wider and looser as well. We don't want to just take a look at things on a daily time frame though either. We want to have we want to have multi time frame analysis. Multi time frame analysis. It's very important to see how things are moving across the different time frames. And the reason for that is because think of it like boats on the ocean, right? Yeah, all the boats on the ocean are going to make their own waves as they're moving through the water. But the larger boats, your giant cruise ships, your oil tankers, they're going to make bigger waves. When you have a yacht, it's going to make waves that are still decent size, but a bit smaller than the cruise ships. Then you have the little speedboats, you have the jet skis. They're going to make waves too, but in comparison to the cruise ships, the waves are tiny. That's how I think about the daily, weekly, and monthly time frames. So that's why we want to be aware of what they look like and how they're moving. We zoom out a bit and we see how sideways they've been and have been for a very long time. In fact, if we go back to last year, the market has barely made any progress at all since last year, right? It's just been very choppy and sideways for a year now. And you zoom out to a monthly time frame, and it's the same story. So, what's all this mean? All this means is that we are in the chop zone. We're in the chop zone, and it's one of the reasons why it could be challenging to make progress in that kind of environment. So, if you are a growth investor, if you like to swing trade growth and momentum stocks, and it's been kind of stop and go and stop and go, that's been the kind of environment that we've been in. Another key thing to consider when gauging market health, because we don't want to just look at an index. An index is going to give us the broad picture, but we want to focus on the stocks that we're actually trading. Build a universe list. Build a universe list of the stocks that you're interested in, the stocks that pass your screens per your system, whatever your system happens to be. Then track those stocks. See how they perform. See how they perform in the same time frames that we were just discussing for the indexes. Why do you want to do that? Because that's going to give you insights into how your system is performing. Your objective isn't to necessarily trade the index. Your objective, if you're trading stocks, is to trade the stocks in your universe. So if the stocks in your universe are outperforming the index, then you want to be in because now all of a sudden you're in leading stocks. And that's the idea. That's a large part of the idea with growth and momentum investing. You want to be trading the leaders. The leaders will break out ahead of the index. So it's a key factor in market health. And it can also help you learn about how the indexes are doing and how they might perform. Because if the leading stocks aren't performing, then it'll be more difficult for the index to perform. Very few leading stocks setting up right now. A lot of them are choppy. A lot of them have already started to break down. So when I see the original question of what is the Q's doing, right? Bring the Q's back up over here and over here. So what's the Q's doing? Well, the Q's starting to break down over here. I already am starting to think that it has a stronger chance of breaking down, not just because of what this is doing, but because I have a strong sense of what the stocks within them are doing, thanks to the rest of the analysis, taking a look at what growth stocks are doing, how they're performing, and seeing how so many are not setting up and are rolling over and breaking down. So, few insights there for you this morning. Let me know what questions you guys have. Type them into the chat. I will scroll through the chat right now. All right. Doesn't look like any questions came in about the cues or about how to analyze markets or any of that. Let me know what other questions you guys have. I'll stay on here for another moment or two if you guys do have questions. If not, where it's Thursday, our weekend report goes out on Sunday. It's free. You could hop on the newsletter if you go to marrowwealth.com / newsletter. That's the easiest way to get on. I'll type that link into the chat over here. So marrowwealth.com / newsletter. You could get that for free. Let's just pin that comment. So go there, get it for free. I'll also type it into YouTube and Facebook and all those other lovely places. So that goes out on Sunday morning, Sunday 8 a.m. I share I share some key lessons that from the week, well, whatever strikes me as pertinent to the current environment, and I also share my full watch list. So all the stocks that pass my screens, all the stocks that are setting up, I share that with the whole audience. So make sure that you're on the newsletter, get some free education. You're able to ask me questions, and it's a great way to stay in touch. So hop onto the free newsletter, marwealth.com / newsletter. Do I trade the VIX or the indexes? No, no, I don't. Well, the what I trade, I like to trade individual stocks. Specifically, I like to trade stock. I like to trade growth stocks, individual growth stocks, stocks that have growth momentum, have large earnings and sales, the types of stocks that have the ability to move very quickly. So I'll screen on the weekends for stocks that have strong earnings and sales and high relative strength, variety of things. And I also screen for stocks that are in leading industry groups and are the leaders in their groups. And I want to trade those because those are the types of stocks that can go on to double and triple uh, fairly quickly. So all the stocks that appear in the newsletter are screened for those qualities. One of the things that we talk about in the newsletter and here as well is that the types of stocks that can go on to double and triple doesn't mean that they necessarily will. They need to be setting up and they need to be high quality setups. So what you want to do is have a mechanism to identify, well, what is a high quality setup? Uh, we have entire coursework, lessons, all those things baked into our elite program. So in the newsletter, in the free newsletter, I'm giving you the list. So that way you could take the list and trade it however you want and know that, hey, this is how this list is already pre-screened. And I've listened to some of what Mike said, and I agree with some of this. If you go into the program, then that's where you start to see my detailed plans for what I'm doing, what I'm thinking, why I think what I think, how I'm trading these things, if I'm moving to cash, all the lesson plans for uh, the hows and the whys and how you could go off and do this stuff on your own. It's a lot more than what I could put into a single newsletter. So that's why the newsletter gets the trade list, like just the trade list and a couple of lessons in there, and then the other stuff is reserved for the program itself. Let's see, any other questions? A couple of people coming in, some people saying hi. Hello, everyone. Appreciate you guys being here. If you're not already subscribed, make sure that you click the button to follow, subscribe wherever it is that you're listening to, hit the like button, leave comments, all that great stuff. If you don't have any other questions, then I am going to end the show. Yeah, we're a couple minutes over here. Let's see. Hi from India. Am I a millionaire? No, not yet at the halfway mark. Is options trading safe? The only type of trading that is safe is the type of trading that you are skilled in. So the objective should be to develop skills, develop each of the 8 core trading skills. I talk about each of the 8 essential skills in my book, The Trading Mind Wheel. So go read that. Once you become skilled, then there's a certain level of safety because you know what to do. You know what you're doing. That's where the safety comes from. No asset class is safe. No stock is safe. Well, the safety comes from knowing what the hell you're doing. And the way to start to know what the hell you're doing is to become skilled within the 8 essential skills needed for trading. So, again, go grab the Trading Mind Wheel book, available on Amazon, Barnes and Noble, Target, Walmart, everywhere books are sold. Okay, so I think that is it. All right. Oh, wait, one more question. I think that this is a decent question from Amir. How to exit from a position using an EMA? Great. So, the way that I like to use to exit positions from an exponential moving average, and let me switch cameras over to here. Switch the screen over, bring this back up so that way we're looking at charts again. Okay, and let's bring up a recent trade. So I'm bringing up ELF. This is a trade that I was in. I had exited on April 25th. I still have my notes over here, so that way you can still see it for why I exited. And I exited on this day here as price was breaking below that moving average. And let me take off all the annotations so that way you have a little bit cleaner of a chart. So on this trade, I entered the trade way back here, right? At about, well, where did I enter it? I entered it at $76.30 back here on what day was that? That was Friday, March 24th. So I entered the trade there and I basically wrote up the trade all the way until it started to break down over here. Now, why did I sell over here? Why did I exit the full position there? And how did I have the foresight to know that that was going to be the end of the move, at least in the short term? Well, guess what? I am not a fortune teller. I don't have the clairvoyance to know if that's the end of the move. What I am using are, in part, are those moving averages. But it's not just the moving average. What I'm tracking and what was in this little box over here are what I consider to be danger signals. There's a long laundry list of danger signals that I look for throughout a trade. One of them happens to be closing below a certain moving average. And the thing with danger signals and why danger signals can be so valuable is because you're not looking at just one thing to get you out of a trade. You're looking at the full weight of evidence to help you get out of the trade. That tells you that, hey, there's not just this one danger signal, there's, in this case, 9 danger signals, and the weight of evidence is starting to tip the boat over, so you better get out while the getting's good. That's how I like to use EMAs, along with a variety of other things. So that is it. That was the last question. I did see somebody ask me about coming on their show. If you do want to interview me, I'm happy to come on the podcast. Just reach out to me, send me a DM. Uh, you can fill out the contact form on mariwealth.com and reach out. Well, we'll talk and set something up. Right. So that's it for today. Thanks so much for joining me this morning. I'll see you back here again tomorrow at 9:30 a.m. Eastern Standard Time. Take care, everybody. Much love. Peace out.